All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market off and rolling here Monday, and been an interesting weekend for the markets. A lot of talk about coronavirus and what's going on with that. In fact, we saw the World Health Organization come out with some statements last night that dropped S&P futures pretty fast, and then we saw them slowly tick on back. We saw them sell off ahead of the open this morning, and they've turned around, and we do have a market that's about 8-9 points higher right now. So let's go out. We want to take a look at the challenge trades and some of the potential setups that are out there, and then this afternoon we'll take a little bit more closer look at the overall market. As Monday morning reads are never my favorite in terms of making definitive statements about what's going on out there, because we can see quite a bit of change happen. But anyway, let's get to it. The challenge has Procter and Gamble and J.P. Morgan. They're both in a very similar spot to where they were at the afternoon video on Friday. Yeah, they both sold off into the close on Friday, but they're both snapping back just a little bit here this morning. Procter and Gamble up 40 cents, J.P. Morgan up 40 cents here. So nothing too major there with them. So going to continue to hold them here. Now, I may pop Procter & Gamble off into the close here today because there are potentially quite a few triggers on the board. So, would want to free up the cash and maybe go after two of them. If we do see, more than one trigger come in this afternoon. So may do that. But, Procter & Gamble, we still have the stock price in our favor. Option price is down just a little bit due to the time decay there on it. In the challenge is just about $100 shy of 4,000. As it sits. Now, potential triggers here. Let me show you the 3-7 crossover list. This is the bullish crossover list. Chipotle Mexican Grill. We talked about this one on earnings. They dropped hard on their earnings. And we talked about it as, hey, the reaction to earnings is not always what the earnings really are. We talked about Chipotle kind of being in that basket of, pretty solid earnings overall, but, saw a sell-off. But we do have an upside 3-7 crossover going on it. So could potentially trigger here today. GLD and gold, I'm bullish on both of these. I'd love to play both of these. I wanted to play gold last week for the challenge, but just didn't get a signal. Could have a signal here today with the fresh 3-7 crossover. Should that hold, gold is also, the GLD ETF is also also crossing over here with an upside crossover. So very interesting action on both. Then we have Honeywell, Nike, and Visa, and all these companies Honeywell and Visa have reported earnings here, so don't have to worry about that. Should they trigger, would be a nice entry there from an option standpoint. And then Nike here, which probably won't trigger given what the recent action has been, but does have some 3-7 upside action. Now you say, well, is it all bullish? No, we had some downside crossovers going on here this morning as well. You can see Alibaba and MGM. This list has gotten smaller over the morning. Las Vegas Sands was on this, but right now MGM. Right, MGM, which up day but has a downside 3-7 crossover. You say, how can that happen? Well, you take off one of the days, and it just alters the 3-day moving average. So we do see that from time to time. And then Alibaba here, which is down here on the day, and does have that downside 3-7 crossover. And this is one that could trigger bearish. So we could be looking at 3, 4, maybe even 5 signals into the close, and potentially some bullish and some bearish. So we'll be very interesting to see how it all sorts out, as the day progresses. Right now, just because of the morning factor, They're not triggering. And as we've talked about many times, the morning algorithm is just tighter than the afternoon one, and we've talked about all the reasons why. But we see that coming into play here this morning. So those are some of the potential challenge triggers that could be out there as the day progresses. But we'll see kind of how it all sorts out. We continue to see Boeing on a run. We continue to see FedEx, moving very nicely here. Very interested to see how Amazon, plays on out. We talked about this one last week. Unfortunately, it's just not a challenge trigger, but continues to rocket ship there to the upside. And then Boeing kind of erasing yesterday's sell points or Friday's sell points, and moving on up here. But close to a Visa trigger, gold trigger, here for the challenge, and would be nice to play. I'd love to play some gold. The options are pretty good, and would be nice to see it break on out here, but we'll only run with it should we have a trigger. So for now, I'll continue to hold JP Morgan and continue to hold Procter & Gamble. Both are still good-looking charts and both within the challenge parameters, here overall. But, with Procter & Gamble's options slightly red, I may take it off into the close to get a new signal, that is potentially here on the board. Okay. All right. One last thing before I hop off. The coronavirus. This weekend, Michelle forwarded me a question about it, and the question basically said, hey, what type of effect do you expect the coronavirus to have on the markets going forward? And we can see what the effect has been in the past, right? And, what has happened. And the bottom line for me, right? I know what could happen with it, right? The world could end. We could all die and the markets won't matter, right? That could happen. Chances are very small, right? An asteroid could hit the Earth. Chance is pretty small. So when we talk about what could happen, there are infinite possibilities and potentials. Now, in the past, we've seen global outbreaks like SARS and Ebola, hit the markets and create some strong selling. Right, we've taken a look at a few of those in the past, and some 7 to 10% sell-offs. Right, so I have to be aware that could happen. But so far, what is the coronavirus equaled? Well, it's equaled pretty much 3 days of selling. Right, 3 days of selling. That's it. That's all. It's just one of those things where the markets are not selling it aggressively. Now, they did sell China aggressively. They sold emerging markets aggressively. But, remember, we don't have a bond market to where investors can go, oh, we have this big scare. Let's just buy bonds and wait it out. Investors can't do it. Bonds just do not pay. And so if they go and buy bonds to wait it out, well, and the market does decide to go up, they're missing out in a big way. So we have that very interesting dynamic here, which, is something I think you can look at and say, well, that's a good reason why the market isn't down, huge on this. And it'll be interesting to see it play out. I do not know how it will play out. I don't have a prediction. I don't have a crystal ball. I know some people think I do, but, I just don't have one that works to where I can predict what's going to happen. Ultimately, it's something that looks like it's getting worse, not better, as I go out and look at it. So I do have concerns, when it comes to that. But at the same time, the market has done a really good job of late in taking one-offs and saying, oh, that's just a one-off. That's not a reason to sell. That's just a one-off. Yeah, it's going to hit things, but, it's just a one-off. Goldman Sachs came out this morning and basically said, look, it's going to hit GDP by 0.5%, but that's just a one-off. It's not something that's going to be repeated quarter after quarter after quarter. And when it's just a one-off, the market kind of just takes it with a grain of salt, moves on. And the market's done a really good job of doing that. And those one-off events have not given, massive sell-offs for the bulls to take advantage of on those dips. And so could we see further lower in the market? We could. We definitely could. But any morning I wake up and the FXI is not selling off aggressively, I have to look at the market as if coronavirus doesn't matter right now. That it's just not that important at the moment, right? And so running with your technicals, your metrics, and just understanding that right now coronavirus is noise, and just like Iran was noise, yes. Could the Iranian situation blow up into World War III and full-on nuclear war? It could, right? You have to be aware of that. The potential is there, but it's not developing. And for the Bears to get something massive, they need one of these stories to develop out. And so far, they just aren't. So far, they simply aren't. And, so we continue to see things go higher, which when you look at all the buybacks and you look at what the earnings are and you look at what the comparables are this year, there's many reasons for investors to buy stocks. And we've talked about many of those. So, how do those two things balance out? And, how much are investors willing to sell versus, buy? I do think the bond market has a big influence there, and that fund managers just don't have other alternatives. Yeah, they can go buy utilities, but the utility sector, you talk about the most overpriced, overvalued sector in the market. Utilities valuations are getting beyond absurd. They were absurd last year. They're getting beyond absurd here this year, and utilities have been a big up here. In January, I think they went up every day for like 3 weeks. It just seemed like every time I pulled up the XLU, they were green. But, and many things could happen. But bottom line, it's like any other noise in the market. You understand that what it could do, and you go and play what you see and what is happening, not what the fear or the overly bullish or overly bearish sentiments are, out there in the market. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.